All right, so here we are today, and just like a follow-up yesterday, the 60-minute algo program that I said that would generate a short on a close or a trade below 512. It exited the long, as we shared with you on the YouTube channel yesterday. Today it entered a new short position. You can see short 194 shares and at 510.24, and there is the current position. The condition of the market is, to be honest with you, it's not that bad to consider this market to have a massive crash. A lot of people are eyeing the gap and the S&P Spider daily chart down below. This is where we look at the market internals. How much can we expect out of this trade, so to speak? First and foremost, volume trend of the person volume indicator is weakening, as you can tell. The advanced decline is 235 advancers versus 264. To be honest with you, what that suggests to me is a rotation, and we're seeing a rotation in the regional banks, a little bit of energy, a little bit of stuff that hasn't participated in this rally that much this year. CVS is up a little bit. We'll go through some of those names in a minute. What do you do? Well, at this point, I think that if we close closer to today or current levels, and if the advanced decline is below this 250, which is neutral, you know, there's the odds that we're going to kind of want to test maybe last week's lows. And then we'll have to take it one day at a time. But as it is right now, it's lunchtime. The 5-minute algo was short, made some money, went short again, made some money, just got out of the short position, and it reversed for a long position here. Now, we're probably due for a little dead cat bounce. We'll see what this materializes in as for the rest of the day. Remember, first breaks of bull markets, people will want to buy decent breaks. So you got Apple down. Let's go and look at some other things real quick and make heads or tails of this. So Apple was a position we had in a newsletter from a week ago, some bear put spreads, which we've gotten out of half of them. I'm not really thinking that you got all that bad news. You can clearly see here on my other screen, Meta just broke out to the upside. And that's the key. People aren't that interested in taking short positions in this dynamic bull market yet. And until you get the rest of the heads of the 5 families, such as Meta and Microsoft, Amazon, and Nvidia down, guess what? It's going to be a run-in-the-mill correction, and that's about all I see happening right now. So I don't think it's a big deal. Where's money to be made? A couple things that I would focus in on. A, the volatility VXX. Now that's an ETF on the VIX. We like looking at this rather than the VIX because it's tradable, and we like to look at the volume participation. So if we do get maybe a little bit of stronger volume out of the VXX today, and that breadth of market towards the end of the day remains under 250, maybe like a 230 print on the advancers, under 250. So if advancers are at 250, that's kind of like even Steven, half the S&P 500 up, half the S&P 500 down. So if it's negative, it's going to show that there's more weight to the downside in the advanced decline. So my 2 cents is, as we get into the end of the day, if we're closer to the lows in the S&Ps, the advanced decline is below 250, so that's what you want to watch for. Then we've got maybe another 1.5% to the downside. After that, we'll take another gauge. I'll do another YouTube video to help you out tomorrow as well. But for right now, we've got the algo. When it's short, don't go against the grain until it gets out of a short position. Day traders, scalping is a different story. So you can be short the 60-minute algo and be long the 5-minute if you get out quick enough on either trade. So we're not taking two different sides of the market in the same market. The SPY is an ETF and the futures are, the futures. So the bottom line is, if at the end of the day we get the advancers below 250, the volume starts to weaken again, we got maybe another 1.5% to the downside, and we've got to listen to what Jay Powell has to say. I see this as a run-in-the-mill correction, not the beginning of the end of the world, A. B, I think we are seeing a rotation into smaller cap. Russell's still looking pretty good. Energy should perform pretty well. Some healthcare drug stocks have not participated in this move, like Baxter, Bristol Myers. They've just been underwater for like the last year. those are what people consider garbage stocks because nobody wants to, there's no money to be made in it. The fast money, the big money's been in artificial intelligence, it's been into the semiconductors, and it's been into the Magnificent Eight sort of names. And if we do get a little bit of correction, money come off the table in those names, it should rotate in the rest of the market, and that's going to be good for long Russell positions. What type of long Russell positions would you want? First off, I would do an option strategy in the May expiration series for the IWM. I like the 207, 224, that wide of a spread. I think you can get that reasonable because there's so much time or theta involved if you're a directional trader. I think that the Russell should outperform as we get through the rest of March. So I'm not bearish on the Russell, I'm more bullish on the Russell and been that way. So if you're going to see more correction coming out of the mega cap stocks, number one, Meta needs to close underneath, let's call it 490 today. And if it doesn't, run-of-the-mill correction. And that's all I see happening. Volatility, VXX, if it closes today closer to its highs and we get that advanced decline weakening, then we got a 1.5% to the downside, fill a gap in the SPY. Let's take a look at the SPY one last time. And you got the gap. Maybe we could get down to like 5 even, 497, something of that nature. I'll keep you updated tomorrow. Stay on the short side for right now for position trading unless the conditions of the market change. Other than that, I'm only looking for, another 1.5% to the downside. Thanks for watching. Hope that helped you out. And also, pay attention to the longer term Russell, because I think that's the one that now everyone's getting behind. And we've been a real bull since last October on that Russell. We've been playing it well. Thanks again for watching. You guys have a great rest of your trading day.